Welcome. I'm here today with Jeffrey Walker, and he is a certified financial planner, and we're going to be talking about the financial and legal issues that affect you after your loved one passes away. So thank you so much for joining us today, Jeff. It's a pleasure to have you.
Thank you for having me.
Yeah, and you've been doing this a really long time. How many years?
This is my 34th year.
So we're telling your age now.
Yes,
I'm so sorry, all to the whole public here. But you came to us highly recommended, and I think you're going to have a lot of really great information for families that are going through this process with a loved one right now. So I look forward to this information. One of the biggest things that families are scared of, and one of the biggest questions we get at transitions, has to do with this whole process called probate. Can you explain exactly what that is and what that means from a financial perspective?
Probate is the estate administration. So it's going through the legal process of settling the estate.
So that's basically what happens, the long and short of it. From a financial perspective, though, what does that mean? I mean, what does that look like for a family? Is it go on for years? Is it months, days?
From the financial side and also from the legal side, although I'm not an attorney, is we want to simplify the process. So anytime we can communicate and organize and plan to get all the affairs in place, it will simplify the process. And the process can be over in 6 months easily. It can drag on for a long time. A lot of that has to do with how well prepared.
You know, working with family members and friends, the whole financial piece of death can be very, very overwhelming, and it takes a very long time, it seems, to get it all straightened out. I really think that working with a financial planner, someone that you can trust, could be an asset to that family. Talk to us about why you think that is the case.
People will inevitably gravitate toward the financial individual who they trust the most. That could be the financial planner, it could be the attorney, it could be the accountant, it could be the banker, it could be the trust officer.
Could it be a concert of all of them?
Absolutely. And most of us who've been doing this for a while certainly believe in the estate planning team.
So what about, what are some of the issues that families run into when a person passes away from a financial perspective that can get a little bit tricky? The typical things, not the anomalies.
Well, typical things are simply just to find all the documents you're looking for.
And that could be a hunt.
Sure.
Needle in a haystack.
Yeah. So I highly recommend that people take all their financial documents, whether it's through banks or credit unions or insurance companies or with stock brokerage firms or whatever insurance companies, to have those documents in place and where someone can find them and react to them.
And one of the issues I have in my own family, I've been in this business for over 20 years myself, dating myself now. These conversations can be difficult, and when you're working with family members who are healthy, I often say to my parents, who is going to be your power of attorney? Where is your will? What about your bank accounts? And the first thing I get is, what are you trying to do, kill me? They're like, no, but help me help you, and you're helping me in the end, because it's for some families, they find out about accounts they didn't know exist years and years and years later. And what's the process of trying to find those if your family member was completely disorganized or scattered? How do you go about doing that?
The first thing I do in the financial planning process is actually make sure that the legal affairs are in place. I challenge my clients to have a will, a living will, powers of attorney, and health care powers of attorney. That's not something I take care of. The attorney does that. But I want my clients to have that in place. After we do that, then I want my clients to organize all their financial documents and make the executor or administrator of the estate aware of what those financial documents are. The third thing is I want them to update their beneficiary designations.
Oh, a lot of people don't think about that.
No, they
You might have
don't.
been married 3 times ago and still have an ex-wife from 3 marriages ago on your life insurance policy.
That's exactly right. And sometimes a primary beneficiary or a contingent beneficiary could have passed away along the way, and so they need to update that. So that's one of the biggest challenges I see is people organizing their financial documents, and not just financial documents, but deeds of trust as well. and for the executor or the administrator to know where those documents are and for them to be updated in terms of beneficiary designations.
So there's a couple of different bank accounts that I'd like to touch on that I've often heard people toss around, and I'm not sure which might be the better one if family members are facing the situation now. There are joint accounts, and then there are POD, or payable upon death accounts. Which ones are better or worse, or what do you recommend families look at?
That's a great question, Nicole. I don't know that either one is better.
What's a little easier to get the access to
Well,
the money, I guess, in the end, if you have to pay bills or whatnot?
In the end, they both give immediate access.
Oh, they do? Okay.
Is the short answer.
Okay, so there's really no,
Well, I highly recommend both. A joint account, a great example of a joint account is if someone has power of attorney and there are necessary bills to be paid along the way.
exactly. And that very person may end up being the payable upon
That's
death
exactly
person.
right.
It may not be, but it may
And
be.
they often are. That's exactly right.
I think a lot of people who are in the older generations often think you keep all of your very important documents in a safe deposit box. Is that a very good idea, yes or no? And what happens when you die to that box?
That's a great question, too. I actually recommend, when possible, to have joint leases on a safety deposit box. So, for example, my wife should be able to immediately get into my safety deposit box. So that solves that problem.
Because I understand when somebody dies, that gets all locked up and you can't get into there.
Yeah, if you don't have joint,
Is that true?
that's true.
Okay.
If you're not a joint leasee.
Okay.
So I recommend, when possible, to have joint leases on safety deposit boxes. And since you brought up elderly people,
Sure.
I'd like to make a suggestion about that.
Sure.
It is very much a demographic issue with financial documents between the younger generation and the older generation. A younger person, a millennial, may very well do online banking with just one institution. I can absolutely assure you, if a person is over 80 years old and they have some assets, it's not unusual at all if they have 3, 4, 5, 6
Oh, I've seen that.
financial accounts.
But is there any way you can do, I'm just curious, can you do a social security number search, or is there any way you can find all these accounts? Because people from those generations sometimes got very skeptical of trust of institutions and kind of hid things because they were worried about money disappearing and going away. And, is there a way you can find that information out, or no?
You can find that information by Social Security
Okay.
numbers. But again, I recommend communicating along the way and organizing those documents and
Sure.
creating awareness for the executor or the administrator so they will not be caught off guard.
Can a person be named? You keep mentioning executor, and we've touched on that in a different segment today, but can a person be named an executor without being made aware?
Yes, they
Or
can.
do you have to agree? Could I name you my executor today, and when I die tomorrow, you would be holy cow? I mean, is that possible?
You can, and I have.
You've had that happen to you?
Well, I've been asked many times to be an executor, and I will not be an executor of someone's estate. And
Anybody for anyone.
that's right, but
But that's a personal choice.
that's right. But a person can be named an executor without knowing they have been named an executor. And so that's not a good idea. That goes back to communication. That person should know before death that they are the executor.
But if you're put in that position, can you say no?
You can. You have legal recourse that you can remove yourself through the court system.
After the person dies, even.
Absolutely.
And then what happens?
Well, the court will name someone.
They choose.
And we're getting over
Sure.
on the legal side here
Yeah,
a little more than what I'm comfortable with. But in the state of North Carolina, it is a qualification process, and they will go spouse first, child
And so on and
second,
so
parent third, sibling fourth in terms of qualification.
So you're talking a lot about families. Does an executor have to be a family member?
Absolutely not.
Okay.
And there's a place for that. Perhaps someone has an only child who has a drug addiction problem. It's probably not a good idea to name that person as an executor. They could have a very complicated estate where trusts are involved, and maybe an attorney or a trust officer need to be the executor based on the complexity of the estate.
So do you know if all estates go through that probate period?
No, they don't. You actually do not have to have a will.
Okay.
Um,
So you don't have to.
I highly recommend that you do have
Yeah,
one.
of course. Yeah, and we've heard that all day long here for sure. But okay, is there any ways we can simplify that whole process as far as the probate goes?
Yeah, you can simplify the probate process by having a will in place. And it's preferably the simpler the will is, the better. You can also simplify the probate process again by having all the financial documents are able to be found and beneficiary designations are updated. That will greatly simplify the probate process.
So I bet you have times when you have, you know, maybe the sons and daughters with an older adult together, or the person who's sick together come into your office, or you go to them. I'm not sure how you operate where you work, but how do you help them have the conversation? And you know, people get really funny about talking about their financial matters. How do you help broker that conversation for the family and help that person understand why it's so important? What are some of the tidbits you can give those watching today?
Wow. Again, people will gravitate toward the financial individual they trust the most. So that could be me, it could be an attorney, it could be a banker, it could be an accountant. But I'm all about the communication process. You know, let's have the conversation and let's do the best we can to put things in place. We're all aware of situations where estates have been nightmares, particularly for some very famous folks.
Right.
So putting things in place is what it's all about. Start the conversation, get the people together who are involved. Again, that's going to involve an executor. You need to have someone to handle your affairs. You'd rather be someone you name than someone the court names.
So what happens to your financial accounts? I think there's a lot of confusion for families when that person passes away. What happens to your bank accounts?
Every financial account, you know, I keep saying this about banks and brokerage firms and credit unions. Every financial instrument has the capability of having a beneficiary designation.
But if you don't have
And,
it and
and
you
that's
die,
legal.
yeah.
That's right, and that's legal. So if you go ahead and take care of that, it's taken care of. And it can avoid the probate process and make it simple.
But in lieu of that, if somebody didn't take all those steps to make sure, I mean, what happens to those accounts? I die tomorrow and I have nothing set up in my life, what happens?
That's a better question for an attorney, but the bottom line is it's going to go through a legal process.
It will, okay.
And the heirs to that estate may or may not like that legal process.
So you said that you had some special nuggets for us today. What are some of those that you think those watching would benefit from in dealing with the end of life of a loved one?
I have a saying to be a good cop. And a COP is an acronym for communication, organization, and planning. No one wants to die and for part of their family legacy to be ill will or hardship or distrust with other family members. If you take care of that on this end, it's less likely or perhaps totally unlikely that it will happen on the other end. So just step forward and start the process and get it going. Usually it's not as complicated as most people think once they start the process.
Any other nuggets you'd like to share with us?
Well, there are a couple nuggets. One is FDIC. We were talking about bank accounts.
Which stands for?
Federal Deposit Insurance Corporation.
That was a quiz. You
Yeah.
passed.
Thank you, thank you. You know, for decades and decades and decades, the limit was $100,000. Now it's $250,000.
Which means the limit. What does that mean when you say the limit?
It means that it's insured for that amount.
Okay, so if the
and-
bank were to go out of business,
It's insured
you'd
for
still get that much
$250,000
back.
per account. And some financial institutions do that per name set, meaning that I could have $250,000 in an account and it would be fully insured. My wife could have $250,000. We could have a joint account for $250,000. And we could even have a joint account with our adult child
and
for
all that would
another
be protected.
$250,000. So you can insure a lot of money. And a lot of elderly people don't know that, and they still don't completely trust the system.
Sure, yeah, well, they went through the Depression.
That's right, and that's exactly what it is a byproduct of the Depression. And but if you can get them to understand that, that will eliminate them perhaps from having so many different financial accounts. About 5 years ago, I had a situation where there were 10 bank accounts, all for a very substantial amount of money. But those 10 accounts could have been put in 4 accounts and been fully FDIC insured. It also creates the opportunity as interest rates increase, maybe they can get a larger interest rate of return on a larger sum of money.
Sure.
So there's no downside in doing that.
Okay.
It's
Anything
just
else?
creating awareness.
Yeah, that's what we're doing here today. Is there anything else you'd like to share?
I would like to thank you
Oh.
and Transitions Life Care. I've had an intimate knowledge of transitions for well over a decade. And they just do a phenomenal job at what they do. And it's visionary to do things like this, to create awareness for people and try to help them get their affairs in order.
Definitely.
And no one wants to have a family legacy where there's strife
That's right.
and complications. Let's try to take care of it on this end, and hopefully it will not exist on the other end.
Yeah, and we believe education is key, because without education, we're not empowered, for sure.
Absolutely.
So we appreciate that you took part in this today, Jeffrey, and you definitely shared some golden nuggets, if you will, for those watching today. And thank you for your time.
Thank you, Nicole.
Thank you.